Because if I look at the take-up in Rotterdam, if I look at the take-up, office take-up then in this case, of The Hague, of Utrecht, that's all very, very small. So if we're looking at a serious office market in Holland, it's Amsterdam. Randstad is a great marketing piece, but in terms of the size of these office markets, in terms of the activity, in terms of the rental growth prospects as a consequence, net absorption, it's all depending on the harbor in Rotterdam that may do a big deal one year, the other year nothing. So it's from that point of view a bit more risky. And that is what you see in the investment approach from the international capital. They are realizing this. So most of the money in Holland is going to Amsterdam or the Amsterdam region. That is what it is, and probably unlikely to change very significantly going forward. But they are very willing to go very aggressive on that. So, and there are definitely exceptions. There will be buildings, there will be locations in the other, let's say, 3 major cities that may be of interest, focusing in on offices in this case. But the times that US investors came in and bought, I remember this in 2006, I think it was, opportunistic capital came into Holland and they said, we want to buy a building close to Amsterdam. There was 100 kilometers away from Amsterdam, and the US investor thought, well, that's reasonably close to Amsterdam. In Holland it isn't, because you're almost in Germany. You know, so the scale of things is just different. So we're seeing the capital coming in. I have to say, though, that the US capital is slowing quite significantly at the moment. And there are some exceptions in Europe. It's still flowing into Spain. But that is one of the major trends that we're at the moment seeing. The US capital is slowing. Capital from Asia is still coming in. It's not really slowing, but it is not as big and as important as it sometimes appears in the media. So they are going for big. They want to do very prime, very substantial allocations, because they don't have their feet on the ground in most of the locations. So they can't spread themselves out too widely. And therefore Europe becomes a lot smaller for them and is focused on a number of smaller cities and regions.
Marcus, you wanted to pick that up.
Yeah, maybe just to add on it, especially if you look at, let's say, the Asian capital, when they want to invest, they want to have a sizable deal size. Also, they are not going to a market to make an investment of 30 to 50 million. They need a 100 million plus deal, and that's something, if you look at the Benelux region, you're able to do this in Amsterdam, you're able to do this in Brussels, but then it's getting very tricky to find. You had some deals in Luxembourg where we've seen this, but that's more or less where the Asian capital is also focusing on. They try to make a substantial investment in the first place, and that's something. There's only very few cities where you see a number of 100 million plus deals per year. That there definitely are the global cities, Paris and London, but then after that there's a steep fall for the next cities where you see a continuous flow of these large deals happening in a stable economic environment, and that's again makes Brussels for them possibly one of the attractive places to be. They have a long, stable, boring cash flow. And that's what they want to do. They don't want to get in and have all these issues with active asset management going forward. That's what I think their attraction is when we talk to our investors, why they are really like to look at Brussels on that side. And on the yield level, they are possibly not so. They also look on the yield side, but it's still something you can factor in some kind of development going forward, and with the financing conditions still working.
And you've recently been active in the market in Brussels on behalf of Korean money, Korean capital. And was that what was driving them? That it was really this: it was a large enough lot size, and also it was long-term lease cash flow.
For them, it was mainly the combination of large lot size, long leasehold, and their investment horizon, enabling them to exit the market when on the business plan side with an asset that still has a very long lease term when they plan to exit it. So if they've given their holding, the lease length is more than 20 years. So even if you exit after a 5 and 8 year horizon, you still have an exceptionally long lease for the Brussels market that gives you a certain pricing attractiveness that you don't find for the typical 369 leases in Brussels. So that's why what was the main point for them to really look at the asset and secure the asset.